Hi, Chris Christopher here, founder and CEO of Reventon, with good friend of mine, Mr. Terry Ryder, who's been in real estate since 1982. Published 4 books, one of the most respected property columnists in this country, and owner of Hotspotting.
Pleasure to be here with you today, Chris. I've enjoyed working with Reventon for 10 years, and what I really like about your business is it's so research driven in everything that it does. I think it's really important that real estate consumers base everything they do on quality research, so great to be part of this.
Thank you very much, and research is the key here. We definitely do our own research, but we also use independent research, and you're one of the most respected people we use, so thank you very much. To everyone out there, we hope you enjoy these insights from Mr. Terry Ryder and Chris Christopher. So in the 18-19 financial year, we've seen a banking royal commission, an election continued, restrictions both in the domestic and the international markets. What changes have you seen in consumer sentiment, and what do you think is in store for the market in the next 6 months, Terry?
Yeah, in the first half of this calendar year, we had like the perfect storm of bad things happening in real estate leading up to the federal election, which created a heap of uncertainty, which is always not fortunate for property markets. But since the middle of May, it's been a series of fortunate events. It's been quite incredible, really. First, the election result, which was unexpected and very helpful to real estate. Then the APRA changes, then the interest rate cuts, then the tax cuts. Even the Westpac win against ASIC in one of the major courts, that court battle went favourably for lenders, basically, which is good for real estate consumers. So all of those things have created an enormous turnaround in sentiment, firstly. Confidence has risen, and now for the first time we're starting to see that translate into actual data, into increased activity, better clearance rates, and prices bottoming out in the major cities and starting to nudge up again. So it's all turned positive for real estate markets in a very, very short space of time. And for the second half of this year, we expect to see that all translate into stronger markets and better prices.
I always find it amazing after an election, almost directly, it's like a switch turned off, the buy sentiment just increases straight away in the market, the activity just increases.
I sometimes think that all Australians are connected to one central brain and they all react exactly the same. When there's an election, no one will make a decision about anything. No one will even spend money on a report, let alone buy a piece of real estate. It's extraordinary every time. It's such a break on activity, and particularly this last one, because it appeared that we were going to have a new government with very unfavourable policies towards real estate. So that was an even bigger dampener on real estate markets. So when that was all out of the way and we got this unexpected win for the Liberals, it just was a release valve for real estate, and it's all rolled on from there with all these other things that have followed in a series of fortunate events, and now real estate is back strongly.
So I've been fortunate, I've been in real estate for 20 years, and yourself, Terry, you've been in real estate for now?
Over 30. Yeah.
Over 30 years, so you've seen this happen quite a few times, and did you think at all they were going to scrap or change negative gearing at all?
I don't think they actually would have got it through the Senate. That's the main thing. They may have tried to scrap it, but it was not going to get through the Senate based on all the research that was done. They simply wouldn't have had the votes. And it was nothing to do with housing affordability. They tried to present it as that, but it was really just a revenue measure. Fortunately, we don't have to think about it or worry about it anymore. It's gone for the next 3 years, and I think Labor would be very foolish in the future if they ever brought it back as a policy, because it's helped to lose them 2 unlosable elections in a row at a federal level, and they'd be crazy to ever even speak of it again.
Well, look, and the last time, obviously, they consider when Paul Keaty did it back in the 80s, and that had a negative impact on real estate. So yeah. I agree, I don't think it will happen again, but I didn't think it would happen. I just wanted to hear your thoughts on that, I guess. So.
Sure.
Terry, obviously with what Chris has just said, the last sort of 12, 18 months we've had a pretty tumultuous time in Melbourne, Sydney, Brisbane markets. We've obviously been a big fan of regional areas over that time, and in the last couple of weeks I've had to go through and crunch some numbers on our existing clients that we've sold to back, dating back to 2017. From a snapshot of about 30 of our clients, we worked out what the average growth level was on the properties they've purchased in that time, and the average for those clients was roughly 12%, which is pretty outstanding in those times. Being that you've been a big advocate of regional areas, what do you think one of the main drivers of regional areas that's been able to get that sort of growth have been?
Yeah, I think the important thing for real estate consumers to understand, it's all about local economies. It's not about national factors. I know economists like to bang on about record low interest rates as being a big driver of real estate, but I think it's it's a major furphy. It's really real estate markets spring out of the local economy, and that explains why we've got some markets rising while others are falling. Melbourne's been trending down for a couple of years, but regional Victoria's been the strongest market in Australia for the last 2 years. Geelong was fantastic for a couple of years because the Geelong economy was really pumping, and its its connections to Melbourne helped, and it's the affordability comparison after the prices had risen so much in Melbourne. So you had suburbs in the parts of the city of Greater Geelong where median prices were in the 300,000s, and some of those markets rose more than 20% in a single year as first home buyers piled in there. And that's rippled out to places like Ballarat, now Bendigo, the hill change towns north of Melbourne. They've all been having double-digit annual growth in their prices. Now even more distant locations like Mildura and Bright and Wangaratta, Echuca, they've all grown 10-15% in the last 12 months at a time when Melbourne's been falling, because those local economies have things happening, particularly the bigger places like Ballarat and Bendigo. They're really strong, on a national level. They're strong cities with growing populations, diverse economies, good links to the capital cities, and people look at the prices and they're getting a lot of buyers out of Melbourne, both home buyers and investors, because they look at the prices. So you can buy good real estate in the 300,000s and get 5.5% rental returns. And you can live up there and have a job in Melbourne because the transport links are so good. So regional Victoria has been really pumping.
I think you hit the nail on the head with affordability being the key driver for that.
Yeah.
CoreLogic in this month's property magazine actually released some stats saying that Melbourne over the last 12 months had a negative growth rate of 3.6%. But on the flip side of that, regional Victoria actually had 3.6% on the positive side.
Yeah.
And there's a couple of different types of investors. Some chase growth, some chase yield. In the same stats, they've said that Melbourne's gross rental yield over that same period is 3.2%, and regional Victoria's performing at 4.8%. So it's really been able to drive both yield and growth, which is true.
Yeah, Victoria's the pumping state, really. I mean, ComSec, with their quarterly State of the States report, it's been New South Wales first and Victoria second for a long time, and then for the last couple of editions it was joint first between Victoria and New South Wales, but the latest edition, Victoria's now clear first. They've overtaken New South Wales. On population, Victoria is the national leader by a long way. Sydney's actually losing population to interstate migration, where Victoria's gaining it, as well as overseas migrants. First home buyers, the numbers are stronger for Victoria than any other state. New dwelling approvals also. So Victoria's very much the leader economically and for real estate, and that's translating into a relatively short down period for the post-boom in Melbourne, and the cheaper areas haven't dropped in price. It's mainly been the top end that has, and then regional Victoria doing really well and continuing to do well.
Yeah. Actually, Chris and I took a drive down Ballarat, Geelong just yesterday, and for us it was like coming to a realisation. 3 years ago, 4 years ago, when we sat down there, it was just an empty paddock, and now there's these suburbs that have just came out of nowhere. And what's really promising about that is not only the fact that you can see the economy growing there, but resales down in those areas have been fantastic as well.
Yeah.
And I think you hit the nail on the head again, that first homeowners are ones that are driving that. They can actually purchase something that, as long as it's within 3 years or 4 years, I think it is, of being built, they can still get the first homeowners grant stamp duty concessions.
Yeah. So there are good incentives that are particular to Victoria as well. But affordability for first home buyers is the strongest it's been for 7 or 8 years, and first home buyers are actually very active, and they're most active in New South Wales and Victoria, which is kind of ironic because they're the most expensive markets. And it puts the lie to that constant media rhetoric about an affordability crisis. And first home buyers are very, very busy at the moment.
Yeah.
Is it also due to there's a very, very high owner-occupier rate there? The investor rate's obviously a lot lower in those areas. People are getting their first home, people are downsizing. So in the Geelong region, where we've invested since 2014, we find a lot of people are going from the heart of Geelong into Morrolili, Mount Dunedin, because they're buying a newer property for pretty much the same. There's also a lot of greenfielding there as well. Do you think that had a big impact on the rise of the property there?
Yeah, certainly I think one of the reasons why first home buyers are out there very busy, in fact, that they've taken over from investors. Investors have pulled back, and first home buyers have been given space to compete a lot more easily, I think. And those more affordable markets have just been pumping really strong, not just in Victoria, it's been happening in other parts of Australia as well. There's a lot more growth in Australian real estate than we're being led to believe by media, because media obsesses over the two biggest cities. That's where most of the media comes from. And they extrapolate Sydney and Melbourne's situation to the whole country. So they talked about a national property boom that never happened, and then a national downturn that's also not happening. But right now, most of the strong markets are in regional Australia. It's also New South Wales, it's also Queensland. And some of the smaller capital cities are doing pretty well. I mean, Adelaide never gets talked about, but it's good. Hobart's been strong.
And they're good affordable entry points as well, aren't they?
Yeah, they are. And they're underpinned by things happening in their local economies that are pretty momentous. There are some locations in Australia that no one's ever thought about that is really going to make them set up and take notice when the nation realises what's happening there, Adelaide being a case in point.
We went 6 months ago up there because it's a market I've always had my eye on, just purely and simply because of the affordability point.
Yeah.
It's a good entry point for our clients, and we've had our eye on that market for a while. I think it was 6 months our last trip, and we always like to fly over and see what's going on. And
Yeah.
I do think there's opportunities there. We haven't got into that market as yet, but it's something that I'm definitely looking at.
Now, Adelaide's the high-tech innovation capital of Australia, and it's got really major businesses moving their headquarters, like Technicolor has been involved in movies globally for the last 50 or more years. They've moved their Australian headquarters to Adelaide for that reason. Elon Musk with his Tesla technology, he set up at Adelaide, not in Sydney or Melbourne, but Adelaide, and a lot of other examples just like that. And that's really making that economy pump. Plus it's got that $90 billion worth of vessels to construct for the Navy, the submarines and the frigates, and that's starting now. So Adelaide's going to be pumping. And you mentioned the affordability factor. It's fantastic value for money, Adelaide. You've got suburbs on the doorstep of the CBD with character housing, median prices in the 500,000s.
Which is crazy when you think about it.
Compared to Sydney and Melbourne, it is crazy. But wonderful opportunities. There's precincts like the Tonsley precinct, where you've got a university, big medical precinct, the Tonsley Innovation Precinct, rail links to the city. It just ticks all the boxes, and median prices in the 400,000s. And investors are starting gradually to wake up to that opportunity.
Terry, we've recently put a focus on the Sunshine Coast. Would it be fair to compare Sunshine Coast with Geelong, as they both have CBD? Sunshine Coast will have one pretty soon.
Yeah.
Airport, similar population, similar employment growth, infrastructure spend. And do you think, second part of that question, do you think that we'll see growth similar to what we've seen in Geelong?
Yeah, I think it's a great comparison. Geelong's been a great example of a regional economy which has been really strong, much stronger than it's given credit for, and out of that's come a very strong real estate market. The Sunshine Coast is doing similar things. In fact, I think it's the most compelling economic story in Australia, because we researched the whole of Australia, and the Sunshine Coast is an incredible story. It's spending more on infrastructure than 3 of our capital cities combined right now.
Incredible.
It's going to have an international airport soon. It's got this $5 billion medical precinct that wasn't there 3 years ago, and that's created a whole new industry. The new CBD, which I'm doing quite a bit of research work for, they haven't put a figure on it because they don't know it's going to be a 15, 20-year project, but they're now starting. The first projects are starting now. I mean, nowhere else in Australia has that happened. You're building a CBD from the ground up, 53 hectares that used to be a golf course.
Yeah, it's incredible.
It is, and they're also getting the undersea cable. They're going to have the fastest internet connection to Asia anywhere on the east coast of Australia. It's just a whole series of things happening.
Still within a short drive to a capital city, and beautiful beaches close by.
So it's got lifestyle as well, and very affordable real estate. And so we're now starting to see that market pump as a result of all that, particularly the top end, because the new medical precinct has brought a lot of new people to come and live on the Sunshine Coast and work in those facilities. And so Noosa, after 10 years of underperformance, suddenly is leading the nation. And I think it was Domain recently published figures showing that it's the #1 apartment market in the country for annual growth and prices. And Sunshine Beach, it rose something like 35% in its median house price in the last 12 months. So it's just starting. to translate into big growth, but I think it's going to be ongoing because it's a long-term story, the Sunshine Coast, one that's really going to make people sit up and take notice. We've seen like UE Insurance move their national headquarters there. We're going to see more companies do that, I think.
Obviously the casino is going to be a game changer for Brisbane too, isn't it? It's going to be a massive thing. It had a big impact on Melbourne. Do you think that's going to impact the prices there as well?
Yeah, Brisbane's, I think we're going to talk about Brisbane in a little while, but it's really on, I've kind of likened Brisbane to a car that's revving, but it can't move forward because the handbrake's on. I think the handbrake's about to be released and we're going to see Brisbane have its growth spurt very soon. Yeah.
Is there anything that's stopping Brisbane doing from that?
Well, I think the thing that never gets talked about, but I think is absolutely pivotal, is infrastructure spending. I think that's why Melbourne and Sydney have been so strong. You know, Sydney's spent tens of billions of dollars and still is on, you know, new motorways and rail links and universities and hospitals. Melbourne's really coming strong. Brisbane hasn't been doing any of that, but it's about to. You know, we've got the new inner city rail link. We've got the big casino complex. That's like a $3.5 billion project. Upgrade to the airport with a new runway, a whole series of things now, sort of one by one they're going to start happening because that generates so much economic activity and jobs, also improves amenity, so all of that helps real estate. And that's been missing from Brisbane. We've also got the population data starting to favour it again. It's now #1 for interstate migration, net gain, so that's helping. The affordability comparison between Brisbane, Sydney, Melbourne is helping too. So I think the handbrake's going to be released really soon.
Yeah. It's funny, we've been looking at Brisbane for the last few years and you know, maybe it is the economic climate, elections and things like that that have sort of slowed it down, but there's a couple of suburbs that have been earmarked to really take off and they just haven't done it yet. And I think you're right, the handbrake's not far from coming off. And
the other thing about Brisbane, and this is true of all cities, you know, the media publishes one figure to describe Melbourne. You know, Melbourne prices have dropped 5%, and it's crazy because there's all these different things happening. Like within Melbourne, you've got the top end's dropped a lot, but the outer ring suburbs haven't dropped. They've held their prices. And in Brisbane, it's the same. There are pockets of Brisbane that have done, you know, 10, 12% growth. You know, those sort of middle ring suburbs in the northern part of Brisbane have done really well. So there are pockets of Brisbane that are already performing.
I think that's a good point because when we talk about negative buy sentiment, people look at that one figure, but they don't look at what that figure consists of, which is some markets falling a lot more than 2-3%, and other markets either being stable or growing. And I think that's a very important factor because when I get asked a lot, how do you think real estate's going? Do you think it's growing? I said in certain areas it's growing, in certain areas it's not. And I think that hit the nail on the head. The buy sentiment is based on that one figure. It's not based on why that figure is. Yeah,
it doesn't take any account of sub-markets and different things happening. You know, a city like Melbourne, it doesn't all rise as one. You know, kind of the recent upcycle started in the inner areas, it rippled out to the middle ring and then laterally to the outer ring suburbs. And right now, the top end has fallen quite a bit. Toorak's dropped 30%, but you know, the outer ring suburbs, the cheaper areas, they haven't dropped their median prices in the last 12 months. So you've got different scenarios playing out. You might get one figure from CoreLogic saying, you know, regional Australia has risen 1%, but it doesn't take into account a Ballarat where most suburbs have risen 10 or 15%, or you know, Orange or Wagga Wagga where they've risen a lot more than the average. There's individual markets that are outperforming for their own local reasons, and that's the secret for investors, is to find those places. And the people who understand how real estate works will find those places and do better than the average person.
So I guess when we research those areas, we look at the sub-markets, as you call them, which is very important because there's a lot of key factors to that one number. So we don't look at the average growth rate, whether that be in Victoria, whether it be in Brisbane. We look at the markets or the sub-markets, or we look at take our clients in as investors, which will outperform the 2, 3, 4%, or as Tim was saying, 10, 15% in some cases, because we look at those things. So I think that's very important.
Yeah, well, that's the best way I think you can help real estate consumers and make them understand it. Forget about what you're reading in the media, or that generalised, usually negative, sort of sweeping statement kind of coverage. Yeah. What's important is understand that there are thousands of different markets and they're all doing different things at different times, all moving in different directions at different speeds. You know, we had Sydney, Melbourne booming, but Perth and Darwin going backwards at the same time, and Brisbane doing not much. And right now we have a whole heap of different scenarios playing out. Melbourne correcting, regional Victoria rising.
That's one of the favourite things about your research that I like, actually, Terry, the micros that you do in your analysis. You don't just look at the overall, you look at the micros of each state and each suburb of each regional city, and you really get, well, for me, I really understand those markets better, and that does change by sentiment when you do understand those variables, I think.
We actually look at, every quarter we go through every town and suburb in the country, and we look at sales activity figures, and we also look at price figures. So we ignore the generalised figure, the one figure for Melbourne, the one figure for Sydney, and we look at what's happening suburb by suburb, and you find that even in Perth, where Perth suburbs have had rising prices in the last 12 months, and sales activity is picking up and vacancies have fallen. So you can see that recovery is happening, but media keeps telling people that Perth's still falling. It's misleading.
Terry, I'm going to change track a little bit, and so obviously it's been a pretty stressful time for a lot of people in real estate, but probably none more than the apartment developers around the country at the moment, with stories like the Opal Tower in Sydney. What sort of effect do you think that's going to have over the next couple of years?
Well, it's not terribly helpful, is it?
No.
It's surprising. There was a bit of research. You know, there's always people out there researching consumer sentiment in various ways, and there was one survey that found that apartment buyers were largely unaffected by that. And fortunately, it's kind of confined to Sydney to this point, and let's hope it stays that way. Definitely is a problem in the industry around certification and checking how things are built. That needs to be sorted. But I think a bigger problem for apartment markets, and it's sort of localised, is the level of supply. Generally, Australia doesn't have a problem with oversupply. Sydney is probably the only capital city with a vacancy rate above 3% at the moment, and that's in the apartment market. So it's got that plus the defects problem. So Sydney's got a problem, but I think the rest of Australia is going to be relatively unaffected, and it's going to be boosted by demographic changes. You know, the old dominant paradigm that houses on land grow more than apartments, and that's always been commonly believed. But I think that's gradually changing because we've got demographic factors favouring apartments. You know, young adults preferring the apartment lifestyle, not making the same choices that their parents and grandparents made. You've got downsizers, retirees wanting to downsize, not necessarily in quality, but into perhaps a townhouse or an apartment with lower maintenance. And then you've got this big influx from overseas. A lot of them people coming from places where apartment living is the norm. So all of that sort of counterbalances those other factors. So I think we're still going to have good demand for apartments in the right places, those areas that don't have oversupply. So outside of Sydney, not so much of a problem.
You just said that Australia largely doesn't have an issue with with undersupply. I think in 2016 and 17, you and I must have been reading different newspapers.
No, I'm saying that, we keep hearing about oversupply, but if you look at the vacancy factors, really Sydney's the only place that has a problem now. I mean, Perth did, but Perth's vacancy was 4.5% 12 months ago. Now it's under 3%. Brisbane, very similar. Melbourne was always expected to have a big oversupply of apartments, but in terms of vacancy rates, it hasn't really happened that way. It's sort of been nudging against it, and there's certain areas of Melbourne where perhaps there's a problem, but generally speaking across the board, vacancies are low across Melbourne.
Okay. Just on Queensland to wrap up, the Southeast Queensland has been the talk of media for a long time, and certainly for a lot of property groups out there, they've been focusing on Southeast Queensland. If you're putting your money somewhere today, is it Southeast Queensland or Sunshine Coast?
Well, Sunshine Coast, which is, as far as I'm concerned, part of Southeast Queensland. Certainly the Sunshine Coast ahead of Gold Coast. And Sunshine Coast it's the number one market in Queensland, no doubt, and it's really pumping. There's other parts of regional Queensland that are strong as well. Brisbane, as we've already discussed, has been stalled, trying to move forward, but it hasn't really done it yet, but it's poised to. The Gold Coast has got other things happening, not so good.
just a quick question. I just want to bring it back to Melbourne for a second. We've seen land prices in Melbourne come back a bit over the last probably 12 months.
Yeah.
Where do you see Melbourne land prices over the next couple of years?
Yeah, I think they're going to be pretty strong. Melbourne keeps getting this amazing population growth, and it gets it from interstate migration and overseas migration. And for quite a few years, Melbourne land prices were rising really strongly,
Yeah.
and then it's just gone through a bit of a downturn phase in keeping with the overall pattern of Melbourne real estate, I guess. But I think it's going to come back pretty strongly because that underlying demand is just going to keep coming in. Unlike Sydney, Melbourne's not losing population to interstate migration, it's gaining from it. In fact, the latest figures show that Melbourne overall with population is gaining more than any other state and capital city by a big margin.
Can you see Melbourne sort of median house price get to par with Sydney?
Yeah, it's certainly going. I think it's going to overtake Sydney and become the biggest city in the nation relatively soon, based on the population trends. I think one of the reasons why real estate's more expensive in Sydney is because the underlying costs are higher. This is a big factor in the affordability thing that we keep hearing about. It's really about the cost of new dwellings,
Yeah.
and that's massively inflated by government imposts. Taxes, fees, charges, this fee, that fee, infrastructure charges, stamp duty, land tax. And that's more so in Sydney than anywhere else,
Yeah.
much more so than Melbourne.
Can I ask that? Because that's a perfect segue into what I was going to ask into the affordability question. We are seeing a massive rise in reinvesting, people that are choosing to rent and purchase an investment property. What's your thoughts on reinvesting?
I think it's a great option for young people, given that young adults, as I said earlier, that they're making different choices to their parents and grandparents. For them, the house on a quarter-acre block out in the burbs is not a choice they want to make, generally speaking. They want to be perhaps in the inner city areas where the action's happening. And so they're happy to rent in the places they want to live and get started on the property ladder by buying elsewhere where it's more affordable. So hence reinvesting, and it makes perfect sense, and I think it's a great idea. They get their foot on the property ladder, they start to build a portfolio, and why not?
It's very funny because I must have been ahead of my time. When I was 19, I bought my first investment. I was actually renting at the time, so I was a reinvestor 20 years ago.
Yeah.
And still today, I live 3 minutes from my office here and I still rent
Yeah.
my own investment properties. So I've been reinvesting for 20 years. But what do you think about reinvesting? I go, I think it's great. I've been doing it for 20 years now, but I'm seeing now that people are choosing to invest where they feel that the market's going to shift and they want to live either close to work or close to amenity or somewhere they want to live, and I'm seeing that a lot more common. So for me, I guess it's just something that I thought I didn't want to have bad debt, I wanted to have good debt, so I wanted to invest, but I'm seeing it a lot more now. The term's getting thrown out around a lot more, reinvestor.
Yeah, and it makes sense from that viewpoint of you want to buy when the market's rising or about to rise. So where you want to live, the market isn't always rising. So you don't want to buy at bad times. So rent.
Or it's super expensive, as you said, because you're in a city area or something like that.
So a smart investor regards all of Australia as their market. They don't want to just buy in their own backyard. They need to be borderless. And so
I love that.
Yeah.
I love that. I'm going to use that.
Yeah.
But I'll put Terry Ryder on.
There is a commission attached to that, but you want to go where the best places to buy now, where markets are about to rise, and that's not always in your own backyard. Right now, it's not Melbourne, but it could be regional Victoria, it could be regional New South Wales, it could be Adelaide, it could be Brisbane, and so I think it's smart. The whole rent investing thing, it makes perfect sense.
Yeah.
Terry, I'd just like to shift the focus a little bit over into the financial sector. Obviously, that's the area I work in.
Yeah.
And obviously, I think the last 2 years we've seen the most changes that I've ever seen to our financial sector, or especially government changes. Things like high density rulings with apartments. We've also seen come out of the Royal Commission. APRA's now made some changes, which has made loans a little bit more affordable for clients. How do you view the changes made 2 years ago affecting house prices around the country to now with those reviews coming on, and what do you see is going to happen moving forward?
Look, I just think generally the changes that are happening in the finance sector lately have been really helpful, because we went for a period where they were quite the opposite. It was just unreasonably difficult. There was an overreaction to the Royal Commission, I think. The lending sector's always overreacting one way or the other.
Yeah, correct.
You have my sympathies there. But, again, those series of fortunate events, it's all starting to turn positive. It's still got a way to go, because, recently we had Westpac win a case against ASIC, which had been claiming that they should not have lent to people. They should have individually scrutinised their spending rather than use the general formula.
Yep.
And Westpac won that, and their response to mortgage brokers has been to be even tougher on that, as far as I can tell.
Exactly right. Yeah, you're very correct.
And that makes absolutely no sense. So the big lenders still haven't adapted. They're still kind of working out their response to the Royal Commission and protecting themselves. But generally speaking, it's got easier. The APRA thing means people can borrow easier and borrow more, and the interest rate cuts means they can borrow cheaper. That's got to be positive.
Certainly, yeah.
And it's starting to show up in the lending figures. It's showing up in the first-home buyer figures. And we've got people out there in Melbourne and Sydney competing for good property, and clearance rates are now up above 80%.
Which is good, because they were down for a while. Like I saw a few people speak on the finance thing, particularly Mark Morrison. He said it's been the most challenging he's ever seen in the lending space in many years, and he's been in lending for a long time. So, like you, we've had a few things that have loosened lending up, but to hear Mark Boris say that, I thought, wow. He goes, I've never seen lending more challenging than it's been. This was probably 4 months ago.
Yep.
I was just shocked to see, and we've saw it, I guess, and no one's seen it, I guess, more than you, because that's what you do all day.
Yep. I think the things I've noticed predominantly in the market at the moment is, at the start of the year, I think the consumer confidence in banks was right down. Yeah. People were very, very worried that they wouldn't be able to get a loan. End of last year, start of this year, there's a lot of the things I was hearing from consumers. And I think that switch is sort of starting to flick over, because I still have people ask me the question, not is it very hard to get a loan, but is it getting easier?
Yeah.
So I think the mentality within the consumer is actually coming full circle, which is very, very helpful, because at the start of the year I heard a lot of people talking, oh, I won't be able to get a loan, the bank won't lend to me, these sort of things, without actually going down the path of investigating.
Yeah.
And I think that's a lot of media sensational sort of reporting as well.
People react too much to media. Unfortunately, most consumers get their information from reading newspapers, and means their head's full of negativity and misinformation. What people need to understand about lending is there's a lot of lenders out there. It's not just about the big four banks. I just think there's a loan product out there for almost everybody. Once people understand there's second-tier lenders and third-tier lenders, and quite often the best deals are the ones below the top tier. They're perfectly solid lenders, but much better interest rates often, and just general better deals. But a lot of people are still locked into this loyalty with the big banks, which is a factor which isn't reciprocated, just quite.
But people are more confident with, I guess, having that brand behind them, or having a CBA or an ANZ, because I think generational market, generational lending, but also when market volatility happens and the big banks, and whether that's storm a lot better, they're not going to recall a loan where a second or third tier lender might, and I think that's really what drives people to want that name, that brand of the CBA, the ANZ, the Westpac, or would you?
Yeah, definitely, or at least the sort of second tier bank that is funded by a major bank. So a lot of people don't mind your Bank of Melbourne, St George's, your Bank West. Yeah. These sort of banks that are actually funded by a larger firm. I think they feel a little bit more confidence, especially in the investment space. Not so much with the home loan. People are a little bit more sort of less cautious with their home loan, I see, than what they are with an investment loan. Investment loan, people get a little bit concerned, will this bank continue to lend? Will it continue to stay interest only? I think those factors and those questions are probably predominantly the ones that I see a lot.
Yeah.
Especially around interest only lending. People are very concerned that they'll never be able to revert their loan to another interest only loan. They'll have to go into P&I, which is generally not the case.
Yeah. I think consumers need educating about finance more than any other area. The research shows that most people don't even know what interest rate they're paying, and they don't know what the cash rate currently is.
Yeah, definitely.
And I'm always having conversations with the people, so I'm really struggling, what can I do? So tell me about your loans, and they're paying 4.5% or, and the mantra these days, if your interest rate doesn't start with a 3, you're paying too much.
Definitely.
And now there's interest rates starting with a 2.
Yeah. That's insane. So
it's pretty advantageous, but a lot of people It just, I don't know, they're afraid to take on the big entity, the bank. You know, people need to be more aggressive. Go to your lender and say, you know, I can do better than this. What are you going to do for me? And if they don't give you a better deal, refinance.
Yep.
So I give you a bit of deal, Reventon.
Yeah. Well, I mean, look, we do a lot of that negotiation on behalf of our customers. So if they're within a certain time period, and we'll reprice depending on how the banks have moved and things like that. So we'll actually go back to them and give that bank that we referred our customer to the first chance to actually try and see what they can do, which is a little bit better. Generally, what I find is that you need to go and get a competitor's offer these days, list a competitor offer with them and ask them to match it or else it'll move. And I find that's probably the best way to keep them a little bit honest. But I suppose these days as well, the investment interest only space a year ago was extremely expensive. Whereas there's, with a couple of rate reductions that have come in, we've seen Westpac drop by about 0.6% on the interest only investment space. We've seen NAB come in by about 0.5% with those rate reductions, which predominantly I find when there's a rate reduction, the banks sort of are very, very keen to help out the homeowners, but the investors are almost like the weird little friend over there that no one wants to touch. But I found this time we've actually seen them actually pass on a lot of those savings as well, which I find has corrected the market a little bit too. I think it's very helpful for consumers too to know that you're not going to be slugged with a 5.5% interest rate. You may get down to 4.2 or 4.3 in these sort of areas where you look at the obviously the rental returns or the yield, because there's your factor on your gearing and things and how the property will actually run.
Was that because mainly they wanted to weight their loan book towards owner-occupiers than investors because they had such a high investment loan book?
Yeah, and also APRA imposed a cap. There was a cap on banks for their investment lending, which was imposed a few years ago, which in turn made it so that the banks bumped up their rates to try and get more owner-occupied loans in to reweight their books. That cap, since that cap has been sort of partially removed, we find that there's a little bit more confidence with investment lending from the banks.
Because even though that's an investment debt's got rental income, they feel that owner-occupied debt's safer. Would that be correct?
Certainly, yeah.
And that's why they want to reweight their books?
Yeah,
Because
definitely.
I find that intriguing when we had that conversation. I thought I'd like to share that with people because that was a reasoning behind that one.
Yeah, certainly. Yeah, most definitely.
Yeah. One of the worst things come out of the Banking Royal Commission, unfortunately it looks like it's not going to happen, and that's the recommendation about mortgage brokers, where
Fee for service?
well, yeah, I think that kind of would have wiped out
That would have been terrible if that happened.
Yeah.
That would have been ludicrous.
because I don't think there's any way the average consumer can find their way through the minefield of the different lenders and the different products without the help of a specialist, a mortgage broker or someone of that ilk, someone who really knows how it works. You just can't get yourself to the best deal.
It was a lot of crazy talk like that. When I was speaking that with Tony, I thought that's absolutely ludicrous. If that's for buyers to have a fair chance at the market from knowing all the products, how can they put a fee for service for a broker? If they did, that would have practically killed the industry. If they wanted to do that.
It would have killed the industry, and the biggest losers would have been consumers, and the biggest winners would have been the big banks.
Which is exactly what they're running against.
Yeah,
exactly.
I found that
You
ludicrous.
just remonopolised the market again, which is the whole reason why we brought mortgage brokers in 25 years ago.
Terry, obviously we're lucky enough to have you in our office, and we always pick up a few little nuggets of wisdom each time you're here. But today we've decided to film this one so that we can actually share it with our audience. There's probably a few people out there that are sitting on the fence wondering, is now a good time to buy real estate? We've just gone through all of those negative things, and we're starting to see that sort of wash out the back end. If you had to give 3 tips to somebody who was sitting on the fence, what would they be?
Yeah, it's like when was the best time to plant a tree? The answer is 20 years ago. When's the second best time? Well, now. I think people should be considering taking action now that the climate's become very favourable, generally speaking. But I think the biggest mistake people make, and the one that they need to avoid, is there's an unwillingness to consult, to access quality advice. Most consumers are out there floundering around trying to do it themselves, unwilling to put in time, unwilling to spend money on good advice, and I think that's a huge mistake. It's the biggest mistake people make, and all other mistakes come from that mistake. The investors I know have been truly successful, and there's one guy in particular who stands out. He's got 40 properties. He's got a business in Sydney. His second business is investment, and he treats that as a business. And like all businesses, you've got to spend money to make money, and that's what he does. He surrounds himself with good advice for which he's happy to pay, and he just keeps accumulating this amazing portfolio. He's now got 40 properties. He could retire, but he doesn't because he likes what he does. But he spends most of his time doing adventure tourism around the world because he can afford to. But I think the outstanding characteristic of that guy and others like him is that they are willing to spend money on good advice, and all other things flow from that.
I think it'd be fair to say that gentleman who's now got 40 properties wouldn't have those if he didn't make the first ones the right choice, though.
Yeah.
It'd be pretty easy to go the opposite direction without getting good advice and purchasing the right ones at the start.
And he's been one of our premium members forever. You know, he accesses good information about where to buy, so that's an important factor as well. The other thing I think that's important, and this is a mistake a lot of people make, is they might do a little bit of research and then they buy something and then they stop. They tune out. They don't think they have to research anymore. Yeah, and so all the people who got caught with property in, say, Gladstone, and I get communication from people like that every week, saying what can we do. They bought something and then tuned out, and by the time they found out the market had gone pear-shaped, it was too late to sell. So you've got to stay informed. You've got to find a way to keep informed, stay tuned in.
And keep investing.
Yeah.
Father gave me that advice, pay people to give you good advice. That was one of the things he told me that always resonated with me, which is further to your point. I think that's probably the most important thing in anything you do, especially real estate.
Absolutely, yeah. It's the biggest mistake that people make, and you know, the mentality out there, this is the way I generally describe it. Yeah, we'll spend $500,000 on buying a piece of real estate, but no, we're not going to spend $50 on a research report to buy in the right place, and we're not going to spend $500 on a valuation to make sure we're paying the right price, and we're certainly not going to spend $5,000 on good advice to develop a plan and have a strategy and do it sensibly. But we'll spend the $500,000, and you know, it's crazy. It's the worst kind of false economy, I think.
Obviously, your business, Hotspotting, which does do not only supply reports to companies like us, but also you do consumer reports. You'd be a pretty good temperature gauge on sentiment. How have your reports been selling lately?
Look, the first half of the year, it was really hard work, and we were transitioning more and more to sort of B2B services because the consumer stuff, the reports were really poor. It's that old factor of seems everyone's connected to one big brain and they all just stop because there's a federal election coming up and the media was negative. It's eased up a lot since the middle of May. It's still got a way to go, but it's coming back step by step. Yeah, but the people out there, the professionals, the developers, the marketers, the people who have real estate businesses, they've seen it all before, heard it all before, and they're just getting on with it. So that's where the strength of the business is at the moment.
I think you've said it before, 30 years myself, 20 years in real estate since 99 now, and our other managers, 125 years collective experience. We've seen this many times, whether it buy sentiment, GFCs, elections, APRA, we've seen it all before, so it all goes in roundabouts and swings, but I think the key takeaway that I've got too, it's not just the one figure, it's the sub-markets. There's our areas that are growing, you just need to be well researched in what you're looking at, and you need to buy the first 1, 2, 3 properties that you buy, the stepping stones to buy you 2, 3, 4, in the case like your guy in Sydney has 40, and myself, I own quite a lot of real estate. It's the ones that you buy that make sure that the right real estate, you're not over leveraging, you're buying in the right markets, and you're getting good quality advice.
Yeah, I'm not a advocate of that old cliche about now is the time to buy, but what I do say is that it's always a good time to buy somewhere in Australia.
That's more to the point.
Yeah, because of what you've just said, there's always these different markets at different points of the cycle. There's always somewhere that's a rising market in Australia. We've got a chart on the wall of my office which depicts the last 50 years annual change in prices in the major cities of Australia, and in the last 50 years there's only been 4 years in which they've all risen at the same time.
Wow.
4 out of the last 50. They're always doing other things, except the late 80s and the early part of the century were the only times we've had genuine national property booms.
That's amazing. A wise man once told me you should invest, your investment should be borderless in Australia.
Yeah, I think you should listen to that person and and pay them well.
I hope there's no pay rise coming. But look, on behalf of myself and everyone, thank you very much. I know that everyone listening or everyone who will listen to this will get a lot of insights. We've always learnt a lot from you, Terry, and me personally, I know that our business has grown from the advice you've given us and our clients, so thank you very much. And more importantly, thank you for your time today.
Yeah, no, I love talking about real estate. The hard part is getting me to shut up.
And on that cue, thank you, Terry.
There you go, you can put one of them in your